Welcome to the Daily Brief, Thanksgiving edition, where I'll go over the action in the market for Wednesday, November 23rd. And remember, the markets are closed, obviously, for Thanksgiving on Thursday. So this will be how things look for Friday, November 25th. We had another pretty positive day. We are continuing to have more of a positive backdrop. Prices keep going up, at least by the time we close. It was a little choppy during Wednesday's session, but our charts are starting to show some improvement. Our setups, our sector rotation, a lot of those different things that we look at are improving. They're not real full-blown bullish at this time, but they are showing some improvement. However, we have been able to get ourselves back into an even deeper overbought condition. We'll have to see how things go during Friday's shortened session. And really, the big tell will be next Monday, after the weekend, after the holiday, after people return, and hopefully volume will kick back up again. That will be what's very telling as far as where do we go from here or about here. So let's talk about what happened. Right at the open, we had a higher open, and we actually went above R1 at 40.20. As the day went on, we retraced and went all the way back down to the unchanged level, bounced up a little bit, came back down, hit it again. So we tested that level twice, and then we rebounded back above R1. We closed just a little bit off of the high, and we were up 0.59% on below average volume. We're just, as we get closer to Thanksgiving, we're just going lower and lower and lower with that, and I'll point that out. The fixation is that the technicals, they're still remaining positive, but we're on below average volume and declining. So that's one thing to be a little concerned about. Interest rates and inflation are still the big focus of the markets. We did get some Fed speak, and I'll just allude to that quickly. The market pretty much took that as positive. So that's what we're taking going into this weekend anyway. So here is how it happened. We gapped up and eventually made our way up to R1 and then even above R1 at a little bit above the 40.25 level. We made it up to 40.27-ish. Or so, or about 40.30. Then we dropped down. We came down to the unchanged level, came back up, came back down, tested it again, and then we're able to advance. And then where you see the bigger bars right here, that's after the meeting minutes came out. So there was some gyration that occurred, and we ended up closing just a little bit off of the high. So it was a pretty positive day. It was the only day that we really saw any economic data, and I'll go through that. So the comments are all markets will be closed on Thursday for Thanksgiving, and we'll have an early close on Friday. That will be at about 1 p.m. Eastern time. And then the FOMC meeting minutes that came out, the big line that the market was taking is where they said a substantial majority of participants judged that a slowing in the pace of increase would likely soon be appropriate. Okay, how's that for non-committal? But they're kind of leaning more towards the side of, okay, maybe we're getting to the point where we don't have to raise interest rates as much. And so the market really liked that and took that as positive. The dollar was down and interest rates were also down. That gave some support to stocks. And in the short term, we have the rate of change going back 10 periods. That is extreme positive. The McClellan oscillator, the stochastic studies, the three charts that I showed together, the Stoch RSI, the Williams percent R, pretty much all of our short-term indicators are extreme positive. But as I always say, it doesn't mean we have to stop here. We may slow down a little bit. We may try to work off some of this overbought condition, or it may become even more overbought. In the intermediate term, our moving averages are starting to get extreme positive with our studies chart that we look at. The PMO studies are getting a little bit more overextended. The BPI is just a little bit into extreme positive territory. And the CCI, that's a new one on this list. That the 14, it's not there yet, but the 20 period has gone back into extreme positive territory. We still have the same yield curves inverted that have been inverted all along. Sentiment still remains positive. It ticked up a little bit, but we're still in the positive side of things without being too far optimistic about things. And then the economic reports. And this was the day that we got all the reports. The final consumer sentiment, it increased slightly. The first time we got this, it was at 55.5. Well, the final reading was 56.8. Still not very good, but a little bit of an improvement over what we've been seeing lately. And the preliminary reading we had was at 54.7. The prior time we got this report, it was at 59.9. So it actually has come down slightly. And then a year ago, it was at 67.4. Again, not anything wonderful at that time, but better than where we're at right now. So overall, sentiment is still going down. And the chart was not updated for that. I tried to refresh it a few times, and I don't have a chart to show you of that one. New home sales, they were up 7.5% on a month-over-month basis. And this kind of calculates into a seasonally adjusted rate of 632,000 units. That's more than was expected at 578,000. But on a year-over-year basis, we're still down 5.8%. Jobless claims were greater than expected at 240,000, where they expected it to be 226,000. Durable goods were up 1% on a month-over-month basis. That was stronger than expected at the 0.4 that they thought it was going to be. The last time we got the report, it was at 0.3%. If you take out transportation, we were up 0.5% on a month-over-month basis. And the last time, this was actually down 0.9%. The mortgage application index, it was up 2.2%. Last week, it was up 2.7%. And our trend, I'm still keeping it kind of neutral because we're just barely going above 20 right now. It's kind of take your pick. So yes, it is above 20, but there's not a lot of conviction right now. Volume is really dropping off, but it is positive and it is getting stronger. It is going up. Our bias is positive with the up couple of days that we've seen now, and our momentum continues to be positive. Here's the chart that I just want to show, just because there's different people watching this video all the time, where we're not really following this yet, where we've been going up a bit more with the S&P 500. That's the white chart. Well, according to this, if we follow what happened from 2006 in through 2008, we could see a pretty significant decline going into the end of the year. Also, the VIX, it has been coming down lately, but going forward with a 12-day shift based on this chart, if we really start to go down, that would really make the VIX start to go up. All right, then here's our ADX, where it's 20.20. I could have switched it over to positive, and I kind of did on the last slides that I use here, but we're just about on that line with the green line on top and advancing. So that is looking more positive. And the equity put call ratio, which really spiked up, is now starting to come back down. And our 5-period average of this equity put call ratio, this could be a spike that the market may be able to work from. But we thought that back here, the last time we spiked, and we thought this last summer, and then we thought it earlier. This has been going on for a while here. We've been getting a lot of false signals that could be indicative of a higher market, only to see something stall out as we go along here. The RSI of the VIX is still getting to extreme negative because we've been going up pretty fast as the VIX has been falling overall. And here's our daily chart. The positive thing here is we were able to get above and close above this pivot level. And we're still below the 200-day moving average. That might be some kind of line in the sand. We're still a little bit a ways from it. We're about, 32 points away or so from that current level. We'll have to see. If we go up, maybe not in Friday's session because it's going to be shortened, but, anything can happen. But next week, if we come up to this level, we're really going to be watching to see what happens at this 200-day moving average, if we even get there. Because last summer, we went right up, touched it, and then really went down after that. Is that what will happen this time? Or Can we break through this moving average and then close above it and then stay above it? That's what we're really going to be watching for, if that even comes into play. And then you see down on the bottom where volume has just been dropping off and off there. Here's our moving average tree. We closed right about on the 200-day exponential moving average, but most investors tend to use the 200-day simple moving average, and we're still below that. New highs, new lows, not a breakout, but we did see a positive day. So we're continuing to go up with our 5 period, and we're turning up slightly and going higher with the 10 period as well. The fib levels were just a little bit above the 61.8% retracement level. So that's positive, and we got above it and then closed above it. And longer term, we're just a little, it's kind of hard to see here. This level is at about 40.20, and we closed at 427. So even though it doesn't really look like it, we're just a little bit above this line here. But some folks might see this and go, oh, this might be resistance, and it could come back down. If it does come back down, we're going to want to see, does the 40.20 level hold as support? If we keep going up, then we have other resistance up here at this other 38.2% retracement, but that's a couple hundred points away from where we're at right now. So what's our outlook then for Friday? The technicals, they're positive and showing improvement, but we are short-term overbought, and volume may remain below average, especially with the shortened session. It will close at 1 p.m. Eastern time on Friday. We don't have any economic reports coming out, and we've got the whole list of geopolitical events, which, again, it's a holiday weekend. Who knows what could happen? But for right now, these other situations, although they're very bad and they're hurting a lot of people, like the lockdowns in China, the situation between Russia and Ukraine, they're not really escalating to the point of having an impact on the markets. And I haven't really heard much lately from Iran, Saudi Arabia, and North Korea. That's kind of drifted out of the news cycle now. So we'll have to see if they end up doing anything over the holiday weekend. So our scenario, we're not going with the down one, other than the fact that we may be short-term overbought. I've switched it over to our positive scenario because our technicals are looking better, but we are short-term overbought. We're getting above some moving averages. We're getting above some pivot levels. We're getting above some fib retracements and closing at those levels. Right now, that appears to be positive, but we have that big 200-day moving average still looming above current prices. And will that come into play either in Friday's session or next week? I'm not really going with the sideways now because the ADX I should have changed that. You could say it's at 20 right now. It's just a little bit above, but it is positive with the green line on top. So our conclusion, the S&P, it's improving, but it's short-term overbought. Volume may be low. Short-term positive, but overbought. Intermediate term, we have some overbought signals there. Not a lot, but still some. Long-term, we continue to be negative. So have a wonderful, happy, joyful, safe Thanksgiving. I will do what I can to prepare the videos over the weekend, and I guess I'll just talk to you in the next video.